One of the best deals we've done. Fortunately, we've had the opportunity to do many good deals in the city, but one that stands out was in 2000, where we were able to buy a 11-acre site in downtown North York at Yonge and Sheppard. That was a site that nobody else wanted. It was originally designed to be built as an office project for Ontario Hydro. They abandoned it and nobody knew what to do with the site. So we were able to rezone it for residential and office and take advantage of a mixed-use opportunity, which really propelled our business into the mixed-use development space.
The best deal that I think on a real estate basis that I've seen was going back to January 2009, and it's hard to remember how desperate things looked like. It said that REITs weren't going to be able to raise any funds, that mortgages weren't going to be renewed, and so cap rates just shot up with all the real estate that was on the market. I happened to partner with RioCan and bought a wonderful portfolio at somewhere around a 9.5 cap. And that's still something that I'll always try to remember, is that when things look as bad as they do, they're usually going to get better. That's the time to jump in.
You know, I've had the good fortune of doing some pretty sizable deals, both as an intermediary when I ran CB Richard Ellis for nearly a decade, and as a principal, having had the chance to run Oxford for the last 7 years. And this may surprise people, but probably the most impactful deal I've ever had was the first one I did as a 23-year-old, which was building a small courthouse in my hometown of Huntsville, Ontario, for $1.1 million, where I learned the trade. I learned that the same skills it takes to build a 11,000 square foot building are the same skills it takes to build a 1 million square foot building. And we actually were able to build this asset, my father and I, and finance out 100% of our money plus 20%. And I realized, hold on a second, you get debt against value of the business, not cost. And so very, very good lesson early in life. Very good opportunity to sharpen my teeth on a tiny level and understand how it worked on a bigger level. So that was the biggest learning for me. As I sit here today, we've been very fortunate to invest in London, invest in Paris, invest in Boston, Washington, New York, invest in many of Canada's most prominent cities. And we've had, I think, success in all of them in a pretty extraordinary way. And so we've built the Cheese Grater in London, England, which is a 620,000 square foot iconic asset, maybe arguably the nicest office building I've ever seen, designed by Sir Richard Rogers with our good partners British Land. We're partners with a related group of companies in Hudson Yards in New York, which is the largest urban development in American history. And we have the good fortune of being a 50-50 partner with them in the general partnership in Hudson Yards. Both the English deal and the U.S. deal there will be books written about them. They're going to be fantastic. And we've had a chance to enrich the fabric of Canadian life, we meaning Oxford, in all asset classes in all of our major cities. And so it's hard to choose which would be the most influential, except to say my first one, that little one, probably taught me more than any of them.
The best deal I've seen done was really actually a long-term growth coming out of the crisis that we saw in the early 1990s. I had the opportunity to work for a entrepreneur who had just sold automotive parts distribution business for $300 million and was looking at deploying all of that capital back into real estate in the mid-1990s. He was roundly criticized for not putting it into the dot-com industry where you could double your money every 4 months, but instead went ahead with building a program of buying real estate companies. And in 18 months, we bought 8 companies, going from a standing start of basically zero in assets to 15 years later, we had $16 billion of assets under management. So terrific success story, built by a great entrepreneurial leader who had a vision and discipline to execute on it.
I think there's been lots of really good deals over our lifetime, but I think the one that I can point to, maybe relevant here in Toronto, would be coming out of the '08 recession. We were able to acquire a piece of property right beside City Hall here at 570 Bay. We acquired it at a time coming out of the recession when the developer was nervous and offered their land for sale. We were able to buy it at a reasonable price, $43 a buildable back then. We built a 463-unit purpose-built rental residential building. We completed the project from the time of acquisition to the time of building completion in 4.5 years. It was 100% leased up within months of us completing the project, which is in itself, a great home run. So I think that's certainly one of the best deals that we've done here in Toronto.
I think I can't really point to one specific deal, but I look at the types of transactions that I've been involved in or my firm has been involved in. They've been the ones that have involved multiple service lines for a client. So I look at any of the transactions we've done here in Toronto, be it 1 York, 25 York, things like this that were part of reshaping the core of the city. Those have been really interesting for us.
So the best deal I've ever done is a list of people who I hired who've turned out to be better in every way I could have imagined and made me better, and everything else comes from that.
In my career, the best deal that I ever did was building relationships with core and very important financial stakeholders. And those are relationships with both lenders as well as the very sophisticated large pension funds. And those relationships have built both Oxford as it was and Kingstead as it is today. And that's the single most important thing that I've ever done.
The best deal that our company did started sort of at the cusp of 2008. We had put together a lease with a large multinational organization for a head office. We'd assembled some land, and then the crash occurred. But we were able to hang on to the option for the land for the period of time and finalize the lease negotiation during that period of time, still not knowing if we were going to be able to move forward with the construction of the office building. Following the crash, we were able to bring in a pension fund and assign our option on the land for it was just $3 million. And then we proceeded to work with the pension fund to kick off a development. The office building was then owned by the pension fund throughout the construction period, and the pension fund financed all the equity, and we had an option to buy back at cost for 50% of the asset upon takeout financing. So the win on that was pretty significant. At the end of the day, we ended up putting a total of $74,000 of real cash into the deal. We financed out. The returns are around 10%, and the valuation was much 25% higher than what was originally budgeted for.